Hello, University of Washington Board of Regents and Senior Administration. My name is Samuel Giles, and I practice patent law in the Denver metro area. In addition to patent law, my firm provides central banking consulting services to institutions of higher education. Just a note of housekeeping that the light bulbs located on the side of the screen are links to supplemental presentations that dive into further detail about the subject matter in this presentation. As you may be aware, the state of Washington has recently commissioned an infrastructure financing task force that is actively preparing legislation to propose for the creation of a state banking facility. Now, despite support from the State House, the Infrastructure Financing Task Force has faced challenges from the state treasurer regarding the costs and mechanisms for deployment of the public banking facility. In my opinion, the University of Washington can help the state reduce its costs of deployment and provide a cost-efficient mechanism to achieve the goals outlined in the state legislation and create a platform for revenue generation for itself. The following presentation highlights how, by filing a state banking charter, the University of Washington can generate at least $3 million per year of unrestricted revenue, create a savings of at least 20 basis points for its external debt servicing, and mitigate risk by diversifying the University of Washington banking relationships. This is the University of Washington State Bank Internal Lending Program Evolution. The economic crisis of 2008-2009 has wreaked havoc on state and local budgets across the nation. In Washington specifically, the Great Recession has created records in total job losses, weeks of unemployment, unemployment rates, and revenue declines. Furthermore, these circumstances have forced massive cuts across the board. Despite these measures, the state of Washington is still facing a multi-billion-dollar budget shortfall for fiscal years 2011 through 13. As you are well aware, Governor Gregoire has requested a special session to address the state's $2 billion shortfall. Due to these economic conditions, state legislatures across the nation have been forced to make cuts in appropriations, innovate ways to create additional revenue streams, and secure statewide access to liquidity. Washington, like many other states across the country, have been forced to introduce bills to establish a state-owned banking facility to help address these challenges. In Washington State, House Bill 2040 was introduced to deploy a state banking facility. Unfortunately, it did not pass the House. However, it did conjure very strong support from the majority party and some support from the minority party. So much so that the Speaker of the House, Frank Chop, instructed the creation of an interim infrastructure financing task force based on House Bill 2040. In addition, Mr. Chop designated Bob Hasagawa to chair the task force. Its mission is to bring recommendations for the implementation of a financial institution to be owned by the people of the state of Washington back for consideration during the 2012 legislative session. Contrary to popular support, Wolfgang Opitz, the Assistant State Treasurer, recently testified on behalf of the State Treasurer's Office to the Seattle Financial Institutions Housing and Insurance Committee. He stated a newly created state banking agency could cost taxpayers upwards of $75 million per year. Given the current budgetary climate, these expenses could produce additional strains on the state budget. In order to compensate for these constraints, resource reallocation may be necessary to bring a state banking facility into fruition. Fortunately, UW can help reduce these barriers to a successful state banking innovation. In conjunction with its internal lending program, the university can file a state banking charter as a calculated step to mitigate risk for the state and supercharge the pursuit of the university's short and long-term sustainable academic business plan goals. Of course, the university would not be able to service the entire state after filing a state banking charter. However, after a significant incubation period, select university and state officials can forecast the appropriate time to expand the internal lending program beyond the scope of the institution. Furthermore, the banking charter and respective incubation period will create a vehicle for invaluable data collection. For example, the internal lending program with respective bank charter could provide the state a cost-efficient method to evaluate, design, test, debug, and reevaluate a banking facility within a controlled environment before a risky statewide banking system deployment is pursued. Thus, the internal lending program will be poised to provide vital operational data to the state and university leadership. Moreover, since the University of Washington has already mapped out its near and long-term goals within the Sustainable Academic Business Plan, it provides the necessary framework to evaluate the internal lending program bank. Let's focus specifically on how the bank charter will impact the financial realities of declines in state and federal appropriations, the necessity of diversifying additional revenue streams, and the mechanics of driving down expenditures. Moody's is reporting that you may seek over $600 million in bonds in the upcoming years and up to $290 million in 2012. Currently, short and long-term rates remain relatively low. However, if interest rates begin to increase, the university may be forced to consider variable rate tax-exempt debt. As you are aware, the university virtually has no variable rate debt exposure. But if there comes a time to venture into this domain, having a bank charter in place can reduce debt servicing for variable rate bond issuance. Similar to the University of Puget Sound in Tacoma, UW can provide self-liquidity to create annual savings of at least 20 basis points. In regards to generating additional revenue, let's dive into the mechanics of a banking charter. Joseph Vincent, General Counsel for the Washington Department of Financial Institutions, recently testified before the Infrastructure Financing Task Force and discussed what would be considered a well-capitalized bank in the state of Washington. One of the major indicators of a well-capitalized bank is the total risk-based capital ratio. Let's assume that the university decides to capitalize the bank with $25 million. Based on the total risk-based capital ratio of at least 10%, we see that the ILP bank can issue up to $250 million in loans. Furthermore, let's say the ILP bank finances $100 million in loans for currently approved projects. Considering the internal lending rate of 5.5%, and assuming an internal cost of deposit of 2.5%, the ILP bank could realize returns 2.5 times greater than a traditional bond-based lending scheme. Or to put in another way, the university could generate $3 million per year of unrestricted revenue. Now that's real money that Provost Wadden can use to execute the Sustainable Academic Business Plan. Once the banking charter is in place, the university can utilize innovative financial products to spur investment in its human capital. For example, an opportunity to strengthen the university brand as a student-centered institution is to issue low-interest student loans. In addition, the ILP Bank can serve as a medium to reconnect with alumni by offering to consolidate their student loan debt. Moreover, the unrestricted revenue created by the ILP Bank can be plowed back into institutional research grants for students and faculty. Other people-focused investments and even job creation are realized through loans to University of Washington spin-out companies. As you are well aware, and as noted earlier in the presentation, there are several infrastructure projects already approved by the Board of Regents that the ILP Bank can immediately partake. One more noteworthy feature of an ILP bank backed by a state banking charter is that it would mitigate counterparty risk associated with current banking relationships. As commercial banks continue to contend with this turbulent economy, these banks face credit downgrades and a barrage of regulatory measures that negatively impact their clients. Diversification amongst banking relationships for the University of Washington is key to assure its constituents that the financial fate of the institution is not tied to one bank and access to liquidity is secure. Let's take a quick look at a snippet from Bloomberg News.
There's nothing like a surprise ratings announcement after hours to get the markets upset. Well, who knows better than Sean Egan of Egan-Jones Ratings? He's joining us now live on the phone. And Sean, is there any company such as like a Bank of America that perhaps is now pushed into a real danger zone?
You have to worry about that, and the question is whether or not there is support, whether the government support is going to continue. The market didn't know about the massive amount of support that the Fed gave these firms over the past couple years, and perhaps there'll be some additional non-disclosed support. A country cannot survive when its financial institutions are not healthy. We view the sovereign and the banks to be joined at the hip. They're not rated directly, but basically, if the banks aren't functioning properly, then the country is in difficulty.
Coupling the internal lending program with a state banking charter automatically diversifies the university's banking relationships, thus driving down risk amongst its banking portfolio. In addition, a bank charter would generate at least $3 million in annual unrestricted revenue and create a platform to create multiple revenue streams. In my opinion, the next step is to coordinate a meeting at the university amongst all interested parties. Representative Hasagawa's contact information is below, as well as his staff members. Just as a reminder, the light bulbs on the left of the screen are links to supplemental presentations that dive further into the impact that filing a state banking charter would have on regional job creation, as well as decreasing the student loan debt burden. Once again, my name is Samuel Giles, and my contact information should pop up below. I would like to thank you for watching, and I look forward to gauging your opinion on this unique opportunity.